Hello traders, this is Chris Keene from KeenPointOfView.com. This is Currency Watch. Most of the majors lost a bit of ground to the U.S. dollar today in North American trading after gaining a little bit of ground in European trading after the German Constitutional Court ruled in favor of the ECB mechanisms, but did place a cap of around $190 billion of the exposure Germany could have, and basically pushed the measures back to the German Parliament to discuss. This leads all the eyes towards the FOMC meeting tomorrow, where we could get the announcement of additional quantitative easing. Most of the majors have already been, I believe, priced in expectations for additional quantitative easing, because we have seen most of the majors move up rather aggressively starting last Wednesday up until this point. So some pairs are up 200 to 300 points. So if we do not have any additional easing announced, we could see a letdown in most of the majors against the U.S. dollars. And there's three pairs that I'm watching heading into this decision that could have marked moves. The first is the Great Britain USD. As you can see, this cross has moved up aggressively over the last few days and is now pushing up against the descending trend line that has contained the price action on the pair for over a year. This currently comes in around 160.30. Any move up to this level could find sellers, but based on the action, if additional quantitative easing is announced, we could push through this level and move up towards the 163 area. But if everything stays pat, and if we just see maybe some sort of change in interest rate expectations or something sort of that, we could see a rather quick move back towards the 160.50 and then ultimately down the 159.60 level over the next few days. And the USD-CAD is another interesting pair, because the CAD has pushed down towards the 97.25 area, which is basically the end of the cliff. If the pair breaks below this level, we could see a rather rapid move down to 94. But the cross had tried to gain a little bit of traction today and move ahead. And heading into the quantitative FOMC meeting, this pair would be actually very sensitive to quantitative easing expectations, because if we do have additional easing, we could see oil prices move up rather markedly, and this could definitely push the US CAD down towards the 94 level. But if things remain on the sidelines, which I expect they will probably do, and they will just once again reiterate the different possibilities they have and say that they are ready to act at a moment's notice, we could see a rather slow move back up towards the 98.4 and then ultimately to the 99.50 level. And the last pair of interest is the USDJPY. This cross is in the most interesting position, because it is sitting right at the end of its range, right of its current range. And if the cross does, it will have the most clear and direct reaction to any FOMC quantitative easing announcement. And if we do have an announcement in the cross of additional easing, the pair could rapidly move down towards the 77 and 76 level. And the Japanese government is already talking about possible intervention, where they have complained today about rising export costs, and there has just been suggestions that an intervention may be necessary. So a move down to this level could rapidly say a pushback higher. Now, if that move higher would be able to gain any traction is another question. Last year, when the Japanese government intervened twice, both times the cross rapidly moved up around 200 to 300 pips, only to lose the ground once again until when the pair made this rather remarkable move higher. That was due to repatriation of funds ahead of the end of the year, Japanese calendar year, which I think is in March. But if we do not have quantitative easing announced, we could easily move up to a 79.50, maybe up to the 80 level. So everything should be rather exciting tomorrow with the FOMC news, and we should see a little bit of fireworks and a little bit of price action to work at. So everybody, remember to keep your trades keen and to play it safe. And this is Chris Keene from A Keen Point of View.